This week has the potential to be absolutely huge for markets. Today we have Jerome Powell speaking. On Tuesday we have PMI numbers and JOLTS job openings, ADP numbers on Wednesday, we have more PMIs on Thursday, and NFP is on Friday. This week could be absolutely huge depending on what this data tells us about the state of the US economy and where the Fed is at with their process of cutting rates. Of course, as we get started in this video, I want to ask a favor from you. If you could hit that thumbs up button and subscribe, I'll do my best to keep you guys informed as we go into this critical week. Let's jump into some price action. So the S&P 500 is teetering towards the all-time high here, a little bit of a pullback on the lower time frames, but still just basically consolidating at the all-time highs. Now, we did get a bit of a wick rejection here when we take a look at the latest daily chart moves. You can see a little bit of rejection at current levels, but perhaps the market is just winding up for a bit more volatility this week with those news events that I mentioned. Now, on my overall positioning for the S&P 500 or my thought process, I am bullish on it, but waiting patiently for pullbacks. There's no need to chase this, but I do think that the stock market has room to continue its upward march off of the data that we've been seeing out of the US economy. We've seen inflation coming down, which gives the Fed the ability to cut rates, and falling yields are a good thing usually for the stock market as long as the economy's not falling apart. And here's a look at yields just because I mentioned them. The 2-year yield continues to drop pretty aggressively, showing that, again, inflation cooling and maybe some slowdown in the labor market gives the Fed the ability to begin cutting rates. We've already seen them cut once by 50 basis points, and it is likely expected they'll cut at least one more time in the remainder of 2024. One huge beneficiary to all of these rate cuts is gold and silver. Gold and silver and just generally commodities do prefer lower borrowing costs because it does mean, again, a weaker US dollar traditionally, and that's what we see in the US dollar. Taking a look at price action for the US dollar, we've basically continued our downward trend, but look at this messy, choppy chart that we've had for the last month or so. It's really been pretty indecisive on the dollar, and I'll share what my thoughts are on this. If I'm looking at the dollar index, I'm looking for a potential bounce, maybe find a short-term low, just so that the risk to reward on the short side starts to sweeten a little bit. I really don't love the idea of shorting the dollar down in these levels, but I am bearish overall and would like to see a pullback, perhaps up into the 102 zone, or maybe even get up into the 103 zone if this week, for example, we get some strong PMI data points or a strong jobs data point that could put in the low for the short term on the dollar index, though I do think the overall theme is still lower for the dollar as the Fed seems pretty keen on the idea of cutting rates. So the dollar is definitely on our watch list. And speaking of watch lists, here's the top setups algorithm on the Edge Finder, which what you'll notice here is, remember, I just mentioned on the dollar, I am overall bearish, and we'll see why that is, not from just the top of my head or a gut feeling, but because software is lending me towards that direction. So let's break that down. If we take a look at some of our top setups, you can see that we're getting bullish readings on things like NZD USD, Pound USD, AUD USD. And to make this simpler, I'm going to adjust over here. If we could zoom in on this, if I go to category and I just select major currency pairs only on the Edge Finder, check this out. So now we have all the USD crosses, and what you can see is, again, confirmation of dollar bearishness. And this has been the theme the last few weeks, which has been the right call for sure. And what we can see here is, again, Kiwi dollar, the pound, the Australian dollar, the Canadian dollar against the dollar, and the Swiss franc against the dollar. So the reason we take a look at this chart so much is because this final score is taking into consideration things like the sentiment readings of the market, technical readings in the market, and most importantly, the economic data that tells us whether or not an economy is looking strong or weak compared to analyst estimations. That is how we built this software. By the way, if you'd like to get access to the top setups algorithm, as well as all of our other different tools built into the Edge Finder, you can currently get access to a trial using the link in the description down below. Or if you're watching this and you'd like to just purchase access to the tool, the first link in the description will connect you to a member of our support team. And if you let them know you were watching this video today, we'll do something special. We'll give you a nice discount. So if you'd like to find out the current discounts, Wink, wink, nudge, nudge. Use the first link in the description. Chat with a member of our team. You can pay with crypto. You can do installment plans. You can ask about a trial. If you'd like to download our free course on the Edge Finder, you can get all of that by speaking to a member of our team. So of this list, the strongest reading that we're currently getting is obviously the Kiwi dollar and the dollar Swiss. We're getting a -6 for dollar Swiss and a 9 for Kiwi dollar. For NZD USD, this is a beautiful uptrending chart, putting in higher lows and higher highs. For me, what this looks like is if we do get a pullback, I potentially am a buyer as long as we continue to see Edge Finder confirmation. And that kind of goes back to what I just said about the dollar index, potentially finding a bounce point before I look to short it. I don't want to short it at the lows. I'd like to wait for a pullback, which would likely equate to the NZD USD currency pair coming down a bit. Now, the other one that we're looking at on the long side was that pound dollar idea. I do like the pound on a pullback. Again, contingent upon the dollar pulling back a little bit from its recent sell-off. Same thing, dollar Swiss. If we see a bounce on the dollar, we could get up into potential levels of resistance that might set up for a short trade. And again, if I take that trade, it'll get shared inside of our Discord channel. Speaking of the Discord channel, if you'd like to get access to every trade that I am taking, I trade indices, commodities, FX, stocks, a little bit of everything. So if you'd like to get access to those signals sent directly to your phone or to your desktop, you can sign up using the description link down below. There's also a promo code there for you. And again, if you have any questions, you can speak to our support team using the first link. On to gold for a second. What we can see here is that a strengthening US dollar could actually trigger a pullback on gold. Not something we see very often these days. Gold has been in a really strong upward trend, and I did actually end up getting trailed out of my gold trade, unfortunately, before it continued. However, not so unfortunately, when that pullback did happen that took me out, I actually switched to a long position in silver and took a really good trade that I did take profits on once this thing started to fall back down. So I made even more money trading silver here recently than I did on gold, simply because the volatility of silver is very high. We saw almost a 10% swing in just a matter of a week. So I am out of that silver position, but I'm keeping an eye on the metals. I am sort of bullish on the metals, but waiting for confirmation from the Edge Finder in order to take a position and waiting for maybe a bit more of a price action pullback. I do think we have room to come down. I don't think we're going down. I'm not saying, oh, I'm saying that gold's coming down from here, but I'm saying that if it does pull back, I would take a closer look at what the Edge Finder has to say for potential fundamental plus technical uptrend move. So that's what I'm looking for on gold. But at current levels, sellers seem to have taken control on the lower time frames, at least for now. This concept of higher lows, higher highs seems to be no longer the case. We've seen a bit of a breakout underneath this level. We'll see if price does continue to sort of respect lower lows and lower highs and maybe take us back down to that level of support around 25.50. Taking a look at the NASDAQ here, big push recently, and I do think that this one is due for a bit more of a corrective pullback. And although I don't have any short positions on this, I have been a bit cautious recently on the indices and I've sold calls on some of the stocks that I own. I won't go too far into detail with that, but I will show you just the high level. So in my portfolio, I own things like Google and Nvidia and Airbnb and Tesla, and I've sold some options, basically collecting premium because I don't think that the market is going to continue to rip higher, no problem. Although it could, I think that the economy is at a point where it's in a little bit of limbo. We're waiting for sort of a more defined uptrend to continue, but I currently have some options that I've sold here, some calls that I've sold, basically leaning towards the mildly cautious to slightly bearish on the indices. I do think that they are due for a bit of a corrective pullback, but I'm not outright short on the market thinking that it's going to drop. I'm just saying that I think that we've had a big push. We may be due for a bit of a pullback, and ultimately I'd be a buyer if we got some of those pullbacks for bigger moves and continuations higher. But again, I think that a lot of the rate cut hype may just be, put to the side for a little bit. We may see a bit of correction. And if that does happen, then I'll be looking to buy. But if it doesn't, if we just rip higher, I'll take small losses on the options that I've sold. And in the meantime, I'll just continue waiting for a pullback to potentially be a buyer. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel. 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.